Today, we're tackling a common misconception: building credit requires credit cards. Not necessarily. While credit cards can be a tool for building credit, they also come with the risk of accumulating debt. So, what are your options if you're looking to establish a strong credit history without relying on credit cards? We've got you covered. Let's dive into some alternative strategies to build credit muscle. Your credit score is more than just a 3-digit number. It's a powerful tool that can significantly impact your financial life. It acts as a report card, reflecting your history of managing debt and credit. A good credit score opens doors to various financial opportunities, while a poor credit score can create roadblocks. Let's delve deeper into the specific reasons why building good credit is essential. Loan approvals and favorable interest rates. When you apply for a loan, be it a mortgage, car loan, student loan, or even a personal loan, lenders assess your creditworthiness based on your credit score. A good credit score demonstrates your reliability in borrowing and repaying debt. This translates to a higher chance of loan approval and, more importantly, securing loans with favorable interest rates. Lower interest rates mean you pay less overall for borrowing money, saving you a significant amount in the long run. Imagine the difference between a mortgage with a 3% interest rate and one with a 6% interest rate. That's tens of thousands of dollars saved over the life of the loan. Our access to better rental options. In today's competitive rental market, a good credit score can be a game changer. Landlords often use credit scores as a screening tool to assess potential tenants' financial responsibility. A strong credit score indicates your ability to make rent payments on time and can give you an edge over other applicants, especially when competing for desirable properties. Lower insurance premiums. Believe it or not, some insurance companies consider your credit score when calculating your insurance rates. This applies to car insurance, renter's insurance, and even homeowner's insurance. A good credit score can potentially lead to lower premiums, putting more money back in your pocket. Utility security deposits. Establishing or transferring utilities often requires a security deposit. In some cases, having a good credit score can qualify you for lower security deposit amounts or even eliminate the need for a deposit. Employment opportunities. In some cases, while not standard practice everywhere, some employers might perform credit checks as part of the background screening process. A good credit score can potentially create a positive impression and give you an edge over other candidates. Negotiation power. Having a good credit score can give you leverage in certain situations. For example, when negotiating interest rates on loans or service contracts, a strong credit history can strengthen your bargaining position. Building good credit is an investment in your financial future. It opens doors to better financial products and services, saving you money in the long run and providing peace of mind. By taking control of your credit habits and implementing the strategies discussed later in this video, you can unlock a world of financial opportunities and pave the way for a secure financial future. Credit cards are often seen as the gateway to building credit, but what if you'd rather avoid the potential pitfalls of revolving debt? The good news is that there are several effective alternative strategies to build strong credit muscle without relying on credit cards. Let's explore these alternatives and equip you with the tools to establish a healthy credit history. 1. Become an authorized user. Leverage the power of positive payment history. The strategy. Talk to a close friend or family member with a good credit history and see if they'd be willing to add you as an authorized user on their credit card account. Being an authorized user allows you to benefit from their positive payment history, as their on-time payments are reflected on your credit report, potentially boosting your credit score. Benefits. This is a fantastic option for those with no credit history or a limited credit profile. It allows you to piggyback on a positive credit history and establish a strong foundation for your credit score. Things to consider. Choose an authorized user relationship carefully. Make sure the primary cardholder has a history of responsible credit card use and makes on-time payments consistently. Remember, their spending habits will also be reflected on your credit report. Avoid excessive spending on the authorized card, as it can ultimately hurt your credit score if payments are missed. It's also important to note that not all credit card issuers report authorized user activity to credit bureaus. Be sure to confirm with the card issuer before relying on this strategy. Point 2. Explore secured loans. Build credit while saving for the future. The strategy. Secured loans are a great option for building credit while establishing a savings habit. You provide collateral, like a cash deposit, to secure the loan amount. Making on-time payments on the loan helps establish a positive credit history. Examples include secured credit cards or secured personal loans. Once you've built a good credit history with your secured loan, you might qualify for an unsecured credit card or loan in the future, potentially with better interest rates and terms. Benefits. Secured loans offer a controlled environment to build credit. Knowing you have collateral at stake can encourage responsible borrowing and on-time payments. Additionally, some secured loans, like secured credit cards, can eventually transition into unsecured credit cards if you manage them responsibly. Things to consider. Shop around for secured loan options with competitive interest rates and fees. Remember, you'll be tying up a cash deposit for the duration of the loan. Ensure the loan terms are clear and there are no hidden fees. Point 3. Don't neglect rent payments. Turn your rent into a credit building tool. The strategy. Did you know your rent payments can be reported to credit bureaus? On-time rent payments can contribute positively to your credit score. Talk to your landlord and see if they report rent payments to credit bureaus. If not, consider finding a landlord who does, or explore alternative ways to get your rent payments reported, such as through a rent reporting service. Benefits. This is a strategy that leverages an existing expense, rent, and turns it into a tool for building credit. Making your rent payments on time consistently can significantly improve your credit score over time. Things to consider. Not all landlords report rent payments to credit bureaus. Be proactive and inquire about their policy. If they don't report rent payments, explore alternative options or discuss the possibility of them starting to report with your landlord. There might be rent reporting services that can help you get your rent payments reflected on your credit report for a fee. Point 4. Become a cosigner. Proceed with caution. Build credit by association, but responsibly. The strategy. Co-signing on a loan for someone with good credit can help you build a credit history. When you co-sign, you essentially become legally responsible for repaying the loan if the borrower defaults. This association with a good credit history can potentially improve your credit score. Benefits. Co-signing can be a way to establish a credit history if you have none or a limited credit profile. However, it's crucial to choose a co-signer relationship carefully. Things to consider. Co-signing comes with significant risk. If the borrower misses payments, it will negatively impact your credit score. Only co-sign for someone you trust completely and who has a proven track record of responsible financial management. Before co-signing, understand the full terms of the loan and the potential financial implications if the borrower defaults. Point 5. Student loans, if applicable, make education work for your credit score, but borrow responsibly. The strategy. Making on-time payments on student loans can contribute positively to your credit score. Student loans are a type of installment loan, and responsible repayment demonstrates your ability to manage debt over an extended period. Benefits. If you're already taking out student loans to finance your education, you can leverage them to build credit as long as you manage them responsibly. A good credit score established through on-time student loan payments can be beneficial in the future when applying for other loans or credit cards. Things to consider. Student loans can also be a significant source of debt. Borrow responsibly and only what you truly need to cover your educational expenses. Missing payments on student loans can severely damage your credit score. Create a budget that factors in student loan repayments and prioritize on-time payments to build credit while furthering your education. Remember, building credit takes time and consistent effort. Here are some additional tips to keep in mind. Obtain your free credit reports regularly. You can access free copies of your credit report from each major credit bureau, Experian, Equifax, TransUnion, annually. Monitor your reports for errors and dispute any inaccuracies promptly. This ensures your credit report reflects accurate information and avoids any negative impact on your score. Pay your bills on time. This is crucial for building a positive credit history. Aim to pay all your bills, phone, utilities, etc., on time every month. Developing a consistent habit of on-time payments across all your financial obligations demonstrates your creditworthiness. Remember, building credit takes time and consistent effort. Here are some additional tips. Obtain your free credit reports regularly. You can access free copies of your credit report from each major credit bureau, Experian, Equifax, TransUnion, annually. Monitor your reports for errors and dispute any inaccuracies promptly. Pay your bills on time. This is crucial for building a positive credit history. Aim to pay all your bills, phone, utilities, etc., on time every month. Building credit without credit cards is possible. By implementing these alternative strategies and managing your finances responsibly, you can establish a strong credit history and unlock a future of financial opportunities. What are your best practices for building credit without relying on credit cards? Share your tips and experiences in the comments below. If you have any questions about credit building or alternative strategies, leave a comment and I'll do my best to help. Don't forget to like this video and subscribe to the channel for more personal finance tips and tricks. Remember, knowledge is power. So let's work together to build a brighter financial future.